Hello everyone, welcome to another weekly outlook video. As usual, we're going to start with DXY. And I want us to start from the monthly time frame for this week, because you can see actually last week we identified this monthly order block, and as you can see this week that just ended, price actually tagged that monthly order block. So if you look at it, you can see, of course, this market is bearish. This is the DXY. Dollar has been weak, and this is what we have. You can see price inverted this in fair value gap. Here we had an inversion fair value gap, which price tagged in January, and now this is what we have February. So if you're going to have a bearish February, and this would be nice, open high to tag the order block, bearish order block, then we get that bearish move if you're going to have a bearish February. However, if you're not going to have a bearish month for dollar, if dollar becomes strong, then of course there's a high probability that this market is going to go for this high here. Before we proceed, if you're an ICT SMC trader and you struggle with top line analysis, execution, consistency, or you just want to start learning ICT trading, I run a 6 weeks program where we focus on building a repeatable trading process. So this is what some of our students have had to say about the program. Check the link in the description box below to sign up. So let's look at the weekly time frame. On the weekly time frame, you can see we had this fair value gap right here, which is actually tagged by price. This week they just ended. And of course, if you look at this price action here, clearly price made a lower low, get a retracement, and we had a lower low. So either price tagged this bearish fair value gap, and this week we see more bearish moves. So if the dollar is strong, of course, the first thing, the market is going to invert this weekly fair value gap. Then from there, I expect a strong dollar. So let's look at the daily time frame. On the daily time frame, you can clearly see again, last week we wanted, this was actually a draw of liquidity, and price has finally got to this point. There's a daily fair value gap here, the same as the weekly fair value gap right here. So if dollar is bullish, the first thing that we're going to see, you will see that dollar will actually invert this daily fair value gap. That can be the first thing before finally we get inversion of this weekly fair value gap. So that is how I see bullish moves. Or this dollar could still be weak. If dollar is still weak, this is actually a nice place for the market to give us a retracement, and we see that bearish move. I want us to look at USDCHF. So USDCHF and dollar are positively correlated. So if you're expecting a weak dollar, USDCHF should also be bearish. So in this case, just the same as dollar, you can see we have a weekly fair value gap, which price actually tagged it last week, or this week that just ended. So if dollar is strong, anticipate that this will be inverted and can be used to push price higher. However, if dollar is still weak, this is actually a good place to anticipate a reaction or the bearish move from here. So let's look at the daily time frame. On the daily time frame, you can see we have this daily fair value gap, the same point as the weekly fair value gap. So again, the same thing, guys. This is an important level. If this market is bearish, this is actually a nice place to get the reaction from. If the market is bullish, we want to see this market invert this fair value gap, then it can be used to push price higher. So let's look at EURUSD. So EURUSD and dollar are negatively correlated. So if you're expecting whatever it is you're expecting, expect the opposite for EURUSD. So EURUSD, again, you can see we had all this week. So guys, the reason as to why right now where price is, we do not expect that because normally we say if this market is bullish, the market has made a higher high, had a retracement, and we had all this week. So if this was a candle body closure above this high here, and it's just bullish candle body closure, at that point we would have a high probability that this is a retracement and we should continue with that bullish move. That is the kind of price action we'll be looking at. But because we have all this week here, which you consider it looks like it's literally a rejection week, and we even have a bearish candle closing below here. So this makes it harder for us to just expect that this is just a retracement and we should continue bullish, because this tells us something. This tells a story. You might find maybe now we should expect a retracement to a higher time frame key level. And that is why you can see we're seeing we are at a critical level where we are either likely to see a bullish or bearish move for dollar, because also dollar is behaving the same way. And that is why you can see we also have this kind of price action for EURUSD and USDCHF. So I hope that is clear. So let's look at the daily time frame. On the daily time frame, you can clearly see we have all these bearish move. So if this market is still bearish, of course, we have this fair value gap here, and we also have this fair value gap right here. So also there's a possibility that this market can still retrace to this fair value gap, and then you have more bearish moves. Or if the market is going to respect this and you're going to see a bullish Euro USD, then of course this inversion fair value gap should be used. We should invert this fair value gap and use it to push price higher. And finally, this will also get inverted and it will be used to push price higher. But then of course, we're going to know it by just how the dollar behaves. If you're trading major pairs, the dollar is your leading indicator. So guys, GBPUSD and EURUSD are positively correlated, and it is negatively correlated with DXY. So that you can do that analysis for yourself. So let's look at JPY Basket. And the JPY Basket was a bit tricky last week. So, but this week you can see it is clear. This market is bearish. You can see we have all this bearish candle. We closed bearish. So I just want to anticipate more bearish moves for JPY Basket. So if you look at the daily time frame, you can clearly see price inverted this fair value gap, and it was used on Friday to push price lower. So at this point, PDRA, there's this order block here. So that's all we see here. Either the market to get a retracement to use it to push price lower, or the market might still retrace back to this inversion fair value gap and get that bearish move. But this inversion fair value gap is an important level. If this market is still bearish, you don't want to see again the market closing above it. You don't want it to be violated. It should just be used to push price lower. So let's look at GBPJPY. So GBPJPY and yen basket are negatively correlated, and you can see it's literally bullish, really bullish GBPJPY, and yen basket is bearish. So you can see price tag this weekly fair value gap, and last week this is what we had. So at this point, honestly, let me just move with the flow. I do not want to counter trend this move right here. So if you look at the daily time frame, you can see there's this gap right here, which price tagged it on Thursday and also tagged it on Friday, and was used to push price higher. So at this point, okay, we do not have any key level. We don't see any key level on the daily time frame as of now. So at this point, if GBPJPY is still bullish, expect more bullish moves from this point. So let's look at gold. Gold has been at all-time highs, and so far you can see gold tagged this weekly fair value gap, and this is what we had. So if you look at the daily time frame for gold, you can see there's this daily fair value gap. This is a bearish fair value gap, which price tagged on Wednesday. We had a bearish reaction from it on Thursday, and this is the kind of price action we had on Friday. So this right here is important. If the market inverts it, then we expect high probability we should see bullish moves. Either that, or the market respects it and it's used to push price lower. So that is what I see for gold. So let's look at NAS 100. So if you look at NAS 100 keenly, you realize that we are still between the range of this high and this low. So this you can see this week here, price failed to take out this high. Then the next week, price took out this low, this low. So we still have. So at this point, we still have this high and this low. Price needs to take one of the two for us to break out of this range. But as of now, this is still a range. So if you look at the daily time frame, you can see we had all these bearish moves, and right here we have a very, very tiny fair value gap. So either price can use this fair value gap to push price lower and we get to this low right here, or the market can use this, invert this and use it to push price higher. But then again, not so fast. You can see there's an order block right here. So there's also still a possibility. We need to also watch this order block and how price reacts to it. Because even if the market inverts this fair value gap, there's still this order block which the market can tag and still we get more bearish moves. And this low here would be a nice target for price. But again, we have to wait and see how the market behaves, because you can see when the market was above here, this high here would have been a very nice target, but instead we had all this drop and finally price has taken out this low, and now we are left with this low here. So because it's in a range, anything is possible, guys. So you just watch and move with the flow, especially of the lower time frame. You can focus on the 4-hour time frame, look at 4-hour fair value gaps or 4-hour order flow, 4-hour order blocks, and work with that. That can be a good way to work with price action, especially when you have a ranging market. So that is all I prepared for this week's weekly outlook video. If you enjoyed this video, don't forget to give it a thumbs up. If you have not subscribed to this channel, please subscribe to this channel. I'll see you in the next one.